Tim, it is good to see you. So maybe start big picture, Tim, and curious where you think this market is and where we're headed. I spoke to Adam Johnson recently on the show. Adam, portfolio manager, friend of mine, all around very smart guy. And Adam telling me he's broadly constructive on the market, Tim. And I asked him why, and he said, it's simple. It just comes down to the two E's. And by that he meant earnings and employment. And as long as those are solid, Tim, his point was, he's going to stay constructive on this market. He thinks there's just generally more to like than fear. And I'm curious to get your take on that.
Look, Adam's had a great call on the market. He's been stalwartly resisted, even at the lows 6 weeks ago. And I think I certainly do not disagree with him. I do think that the path of least resistance is higher. And I think there is some selectivity required in both sectors and individual stocks. I have to be a little bit careful about how I talk about individual stocks, but definitely the market has had a much stronger, faster V-shaped recovery off those lows that we saw right at the heights of the tariff tantrum, if you want to call it that, about 6 weeks ago. And look, we're at an inflection point right now. We're up near where we were 6 weeks ago. It's the next move. 5% higher is not going to be easy, but it certainly feels like both the macro picture and the earnings picture for individual companies is headed in the right direction.
So we can look, Tim, we can say, listen, earnings solid, economy running, I think 2.4% according to the Atlanta Fed tracker. I mean, those are reasons to stay positive. What would be on, Tim, your list of worries? What would be on your radar of concerns?
Well, obviously, if we got through the next month or two and had very disappointing progress on the making tariff deals and trade deals with key trading partners around the globe, I think that the market would not receive that very well and maybe take another turn lower. And I think if you were to just have a complete stalemate in the major conflicts around the globe, particularly the Russia-Ukraine conflict, and a complete refusal from Iran to do any negotiations on their nuclear capabilities. Those would be two major sources of concern for the market.
Tim, we're talking stocks. I'm also interested to get your take on the role of commodities in investors' portfolios, and which commodities?
Well, look, we certainly agree with the train of thought out there that we're at a year or two into a commodities, a secular commodities super cycle. Gold has had a very nice move, 50% up over the last 12 to 18 months. One area that we've spent a lot of time looking at is copper. It has trailed that move significantly. I certainly think that with the incredible amount of industrial production that's been committed to take place in the manufacturing sector of the U.S. from not only domestic companies but foreign countries around the globe, close to $10 trillion. Copper, although it's been under the weight of the Japanese spending, the Chinese spending boom kind of hitting a brick wall a number of years ago, it has to have significant upside from this level just to support all of the additional industrial building that's going to go on in this country and the electricity demands and just other infrastructure-related power demands that will be required in addition. And of course, if you want to talk about individual stocks, I mean, the main blue chip in that sector has got to be Freeport Copper. It's certainly been in a downtrend since it reached the mid-50s almost a year ago to the date. But I think that the stock has recovered very nicely from its lows 6 weeks ago, and it's kind of poised between the 50 and 200-day moving average. You get a close above that 200-day, right around 41 for more than just a couple of days, And this stock could go back toward the high 40s, maybe the $50 level.
Tim, great to see you. Great to have you on the show today. Thanks so much for joining us.
Well, thank you so much for having me, and enjoy the rest of the day.
You too, sir.